Channel everybody. Today is Saturday, 21st 22nd August 2026. We have incredible packed video today. First, we are going to do a medium length update on my portfolio to see how our asset allocation is holding up against market volatility. Then we are going to take a look at a massive non-financial tech announcement that came in a recent Independence Day celebration. And finally, for the second half of the video, I'm going to walk you through a comprehensive business case study which I recently wrote on Medi Assist Healthcare Service. If you want to understand how to analyze a company's competitive moat, you will not want to miss this. Hit that like button and let's jump to the into my portfolio. Then, all right, taking a look at my 1 year done stock portfolio overall green overall value line is continuing its massive upward trajectory. The gap between dark blue and stock line and light blue ETF line is widening significantly as our individual stock pick continue to heavily outperform the broader market. Looking at my exact portfolio distribution, I'm currently sitting in a allocation of 68.37% in direct stocks and 31.63% in ETF. The numbers or stock side are still absolutely staggering. Currently sitting at an 137.41% profit. Our ETF allocation has significantly slight pulled back this week, currently showing a very minor loss of 0.37%. Moving Moving over to our sectoral allocation, the concentration remains intense. Quick service restaurant make up 55.38% of the entire portfolio, packed heavily in single stock. My second largest pillar is computer software and consultancy at 24.11%, which is spread across the three different companies. The strategy remains unchanged. Concentrate capital in heavy conviction ideas and use ETFs to anchor the remaining cash. Now let's transition into the main event. I want to walk you through a business case study I recently completed on Medi Assist Healthcare Service. The company is fascinating play on Indian health sector. Medi Assist operate as a third party administrator. They act as a technological tool bridge between insurance company technological tool bridge between insurance companies, hospital networks, and you, the patient. Crucially, they do not sell insurance or carry any financial risk. They simply provide a digital infrastructure to pre-authorize a cashless treatment and audit medical bills and detect the fraud. In a gold rush of Indian health insurance market, MediAssist is companies selling the shovels. With India's health insurance penetration sitting at around 4%, the runway for growth as more citizens adopt to insurance is massive. Five level mode I would like to share with you. These are the mode. First one, layer hospital network. They have what makes before that I would like to say what makes this business truly special is a interconnected five level economics mode. Those modes are first one, hospital network. They have a negotiated confidential billing rates and build deep relation between over 28.5 k hospitals, including critical tier 3 and tier 4 town facilities. Second point, second mode I would like to say is insurer dependency. Once an insurer integrate MediAssist API into their backend, the switching costs are brutal. Moving 5 to 10 years of the client history to a new TPA could cost a mid-sized insurance 50 to 80 crore in a direct migration cost. Third mode is data and AI. They process over 10 million claims annually. Their AI system, Maven God, uses this massive data set to detect the pattern of inflicted bills and hospital level fraud, saving the insurers of thousands of crores. Fourth mode is Regulatory compliance, obtaining an IRDA license and building the required data privacy infrastructure keep a casual tech startup completely locked out of the industry. And last but the least, what I would like to say is scale economics. Though an aggressive roll-up of strategy, acquiring competitors like Paramount, Medvantech, Raksha, and Medicare, they constantly lower their cost per claim while expanding their market share. At the end, I would like to discuss about the risk of this company. Uh, yeah, here. However, no business is perfect. Two biggest risks here are fee compression and regulation. Mediaset does not have absolute pricing power if insurance companies demand lower fees to protect their own margin. Mediaset could get squeezed. Furthermore, I would like to say is IRDAI regulator could drastically alter the landscape by capping the TPS fees or mandatory direct cashless claim between insurers and hospital effectively bypassing TPS altogether. Overall, it is a highly profitable, dominant business in the fast growing sector, but you have to monitor the regulatory environment closely. Now, we are going to discuss the one hot topic of the week. Let's step away from the stock chart for a minute and look at a massive national development that happened this week. During the 80th Independence Day address on 15th August 2026, Prime Minister Narendra Modi, placed technology and innovation squarely at the center of the India's growth ambition. The biggest announcement was a major skill development initiative aimed at providing AI skill training to 1 crore youth over this coming year. The goal is to ensure that the India's youth can lead in emerging AI era. Alongside this, Prime Minister also emphasized the urgent need for India to establish a global leadership in frontiers like quantum computing, space technology, and robotics. This is a massive push to build the digital infrastructure of Viksit Bharat. As an investor, we should be paying close attention to the companies that will build and facilitate this tech ecosystem. Okay, at the end, let's wrap up this week's video. We covered some massive portfolio gains and a huge national push in AI and deep dive masterclass into how to analyze a company's economic moat. If you want to see more case studies like Media's broker, let me know in the comments below. Don't forget to like this video, subscribe to the channel, and I will see you in the next one. Thank you.